I think the president's action on steel probably had something to do with the timing of the decline, but I don't think it was the factor which determined the amount of the decline. For some time, stocks have been rising at rather rapid rates. Corporate earnings have not been rising. Dividends have not been increasing, and it's not to be unexpected that perhaps a correction of some of those unusual factors on the upside might occur on the downside.
Well, some observers from time to time say that the stock market is a forecaster of events to come. Can you predict, or would you care to take a look at what you think this might be forecasting, the decline?
The stock market has been a good forecaster from time to time in the past. It also has been a rather poor forecaster occasionally. For example, the last 4 or 5 years, the stock market has been booming along and presumably forecasting better business, which has really not materialized. Corporate profits are not any better than they were 5 years ago, but stock prices are 50% higher or thereabouts. So maybe the stock market is really correcting a previous incorrect forecast this time rather than making a new correct one.
Well, in a nutshell, Mr. Buffett, can you give us your opinion of just exactly what happened, what caused it?
Well, there was undoubtedly some forced selling the week when the stock market hit the news. The previous week, prices had declined about 6% for the week on average, and there was some stock that was forced upon the market both by margin calls from brokers and some that was forced out by improperly secured bank loans. And this in turn set up a self-generating mechanism on the downside for a while, which we may have seen the last of and which we may not have seen the last of.
In businesses, we're looking for an entity that has durable competitive advantage, somebody that not only is doing well now, but will do well 10 or 20 years from now. And in capitalism, when you have a wonderful business, it's like having an economic castle. And the nature of capitalism is that people want to come in and take your castle. It's perfectly understandable. I mean, if I'm selling television sets or something, there's going to be 10 other people that are going to try and sell a better television set. If I have a restaurant here in Omaha, people are going to try and copy my menu and give more parking and take my chef and so on. So capitalism's all about somebody coming and trying to take the castle. Now, what you need is you need a castle that has some durable competitive advantage, some castle that has a moat around it. And that moat, one of the best moats in many respects, is to be a low-cost producer. But sometimes the moat is just having more talent. I mean, if you're the heavyweight champion of the world and you keep knocking out people, you've got a competitive advantage as long as you can keep doing it. And it's very profitable if you're the one that happens to be able to do it. If you can turn out great motion pictures, I mean, you know, Steven Spielberg, I mean, he's a fellow to bet on, and it has enormous economic value. Well, we're looking for that institutionalized. We're not looking for the best brain surgeon in town. We're looking for the Mayo Clinic. So we want an institution that, regardless of the person in charge, will maintain that competitive advantage over the decades. And we hope we find that in some businesses, and then we try to get the best person that we can to run them. Usually it's the person who's been running them.
Are you always right, or do you make mistakes?
No, we make mistakes. It wouldn't be any fun if we didn't make mistakes. I mean, if I went out and played golf and on every one of the 18 holes I hit a hole in one, I wouldn't be playing golf for very long. I mean, you have to go into the rough occasionally to make the game interesting. Not too often, though. What money is claim checks. It's a claim check on the output of others in the future. If I have a pile of dollar bills, or if I have a pile of stock certificates or a pile of bonds, those represent claim checks which I, or a charity, or my descendants, or my spouse, or whomever can use to exchange for the goods and services produced by others. Somebody else will work for that. I can hire, now if I wanted to, I could hire thousands of people to sit every day and paint my portrait. You know, and they would be employed, and I could use these claim checks, and I could look for the perfect portrait of myself. I would never find it because I don't look like Arnold Schwarzenegger, but I could keep looking for the guy that would try and make me look that way, and I could keep handing out these claim checks, and I would command that person's services the rest of their life. They wouldn't do anything else for society at all. And, you know, or I could build myself a wonderful pyramid. I could say, you know, why should people have to go to Egypt to see one of these things? So I'll spend all of these claim checks I've got, and just have all thousands of people. We'll have them in loincloths and, you know, like the original cast in Cecil B. DeMille production, and they'll haul these blocks of granite. We'll build a pyramid and make people forget all about Egypt. And that would command the services of other people. So money will let you can exchange these little pieces of paper for other people's goods and services in the future. And the wisdom with which you do that, or your own proclivities, you know, depends on very much on the individual. And some people build pyramids, and I hope other people engage in cancer research.
You break one of the cardinal rules of investment, diversification. I mean, everybody's told, don't put all your eggs in one basket, spread them as widely as possible. You actually do sometimes, and put enormous numbers of eggs in one basket, don't you?
I stick with what I know. If somebody owns 50 stocks, can they really like the one they rank as number 50 as well as the one they rank as number 1? Can they know it as well? I don't think so. And knowing what you do understand and don't understand. And that is the key. It's defining what I call your circle of competence. And everybody's got a different circle of competence. The important thing is not how big the circle is. The important thing is staying inside the circle. And if that circle has only got 30 companies in it out of thousands on the big board, as long as you know which 30 they are, you're okay. If you buy a piece of American industry and you get a cross-section, you're going to do well over 10 or 20 or 30 years. But you're not going to do it if you try and dance in and out every day. The Dow Jones average started the 20th century at 66. It ended at 11,400. You'd say, how could you lose money during a period like that? A lot of people did because they tried to dance in and out. You don't need a lot of brains in this business. I mean, I've always said if you got an IQ of 160, give away 30 points to somebody else because you don't need it in investments. What you do need is emotional stability. You have to be able to think independently, and you have to be when you come to a conclusion, you have to really not care what other people say and just follow the facts and follow your reasoning. And that's tough for a lot of people. My job is to have those 70 CEOs sending out the right message. So every 2 years, I write them a very simple letter. It's a page and a half. I don't believe in 200-page manuals because if you put out a 200-page manual, everybody's looking for loopholes, basically. But page and a half, it's very hard for them to argue about what I'm talking about. So I tell them, you know, that my reputation, Berkshire's reputation, is in their hands. And not only, and we've got all the money we need. We'd like to make more money, but we got all the money we need. We don't have an ounce of reputation beyond what we need, and we can't afford to lose it. So we never will trade reputation away for money. And they're the ones that are the guardians of that, and that I want them to not only do what's legal, obviously, but I want them to judge every action by how it would appear on the front page of their local paper, written by a smart but semi-unfriendly reporter, you know, who really understood it, to be read by their family, their neighbors, their friends, and it has to pass that test as well. And I tell them I don't want anything around the lines. I tell them there's plenty of money to be made in the center of the court, and I'm 84 and my eyes aren't that good anymore. I can't quite see the lines that well. So just keep it in the center of the court, and if they have any questions, call. If you look at the leading candy bars, for example, for the last 50 years, I think you'll find Snickers on top, and then you got M&Ms. You got two types, so they don't combine the peanuts with the other ones. But I think they're number 2 and 4, and you know Hershey's in there number 3 or something of the sort. Yeah, I can't take them on. I don't think Elon should take them on. You know, they have moats. When you go into a drugstore, 7-Eleven or something, and you say, I would like a Snickers bar, and the owner says, oh, I've got something, the Musk bar at 10 cents off the Snickers bar. You say, give me the Snickers. And if he doesn't give you the Snickers, you go across the street and buy the Snickers. Brands are moats, I mean, obviously. And if you try to, you know, this product is selling, you know, to hundreds of millions of people who want Coca-Cola. If you say, I'll sell you something for 2 cents less, or I've got some celebrity's name on it. They actually, Richard Branson tried Virgin Cola in the United States about 15 or 20 years ago. And a million others have been tried. So I don't really have the same urge to produce automobiles that he apparently has to produce candy, but I don't suggest that he take on Snickers.
You're taking me literally and stepping away from the real story here, which is kind of this war of words between you and Charlie and Elon. And I just want, do you even know Elon Musk?
I've never said anything negative about Elon. I mean, you know, you're baiting me a little bit to do it. But,
I am.
But I've never, you know, people like his car and everything. But somebody mentioned that now he's talking about financing. Something this morning about that. I thought I heard that earlier.
Yes, well, actually, Andrew just read some headlines where it looked like Tesla may be going back to market to pick up some additional financing. I'm not entirely sure.
Well,
all I heard was the headline.
That's what I call a counter revelation. I mean, Charlie, you know, because I think it was just a few days ago they said they wouldn't need financing. But you know, he's trying something to improve a product, and I salute him for that. And the American public will decide whether it's a success, and it's not easy. You know, it's probably easier to develop a new car than to compete with stickers. But some products have terrific modes. You know, probably Elmer's glue does. You know, WD-40. I mean, there's just certain things that you are not much inclined to be dissatisfied with and see. And I would say that, incidentally, that the iPhone. You know, has a terrific moat. I mean, people that have an iPhone, or maybe have some other phone, but they want to continue with the product that they've got. They want the new version. It's just easier for them. They've learned how to do everything, and their life's built around it and all of that. And moats are very useful. Costco has a moat in people's mind. I mean, you know, Amazon can raise the price of Prime, you know, 20%, and you can't do that unless you've built something within that image of the Amazon Prime that's based on reality, that you're going to get a lot for your money and you're going to want to use it, and then you can raise prices $20. But if you're selling, you know, if you're selling some commodity product, you can't do that. You need a moat.